What's going on, family? Welcome back to another YouTube video here, another market analysis for you. This is a major week, and I want to get you prepared for it and bring you some information that may help you become a better investor, trader, whether you're new, intermediate, or advanced. So my name is Dr. Brian or Dr. B. You can check the links down below to join our Discord and also grab you some free shares by joining Robinhood or Webull. Without further ado, let's jump right into the analysis. Now, what I'm going to do is I'm going to jump into our charts, our technical analysis. I'm going to also show you a fear and greed index and also the economic calendar for this week, or the fundamental data that allow us to make decisions. All right. That being said, let's jump into it and have some fun today. Let me bring my screen over here, and there we go. All right. So we got our economic calendar here up, ready to go. And first thing that we have on the docket that we want to pay really close attention to is this Wednesday. Okay, this Wednesday we have the FOMC interest rate decision day. All right, this day is been on the docket for a minute. Every FOMC meeting we've been waiting on a rate cut, and the Fed has been looking at each and every data point leading up to each and every FOMC meeting, and they've been continuously pausing rates, right? And at this point, there is potential, right? We don't know until they're going to say something, potential for a 0.25 or a 0.5 basis cut for the rates. All right. Now, the key thing to understand about this is how we react to it. Okay. Because we could already have it priced in. Investors and hedge funds and big money could have already predicted this, and they're ready to sell it back down to buy lower, right? Or we could take off into all-time highs, right? Squeeze a little bit more out of the market, get into some greed sectors there, and you'll see in just a second. And then we come back down, right? But my ultimate just opinion, right, not financial advice, is that the data is not really adding up, right? Most of us believe we're in a recession, this R word, and that we're headed towards that. Another technical analysis piece that we may look at in just a second that you'll see is that we're extremely bullish, right? And we've been for a couple of years now. And every couple of years, right, we typically need to just have a cool off. Now, we can't time this cool off. We will know when it happens, so on and so forth, right? But until then, we want to trade the trend, invest with a trend, hold your long-term shares, buy when there's that correction, right? And just ride the wave. All right. So that is one piece here. Retail sales is also important at 8:30 on Tuesday. And then any 10 a.m. data, I'm always paying attention to the home builder confidence, business inventories, slight importance there. We got our normal jobless claims on Thursday, showing us what our unemployment filings look like. And then the next week, we have PMI starting off the week, and then we're finishing up the month. So PCE and GDP. So my prediction is that this FOMC meeting will kind of spearhead the direction that we go in, right? Once that direction is chosen, right, following that FOMC meeting, we will probably continue into the month of October with that direction pretty clearly. And I have a bias, but we'll keep it open-minded, right? Because as investors and traders, we react. We don't guess. We're not gambling. We have historical context and then current present context and information that allows us to make decisions. All right. So that is one thing, is the economic calendar. Let's jump into our fear and greed index. We're sitting right at neutral. So for my newer investors, this is a simple way that we always show new investors how and where to buy, right? When we're in extreme fear, you want to consider buying your respective stocks that have taken a, 3, 5, 10+% pullback. And if you're over 20 to 50% and it's a solid company, if you've done your due diligence, right, you can look at buying those companies on that dip. All right. But when companies have dipped 80, 90, 100% from the highs, my rule of thumb is I like to do a little bit more digging, because is that company, just going to stay down there and it's going to take a couple years to recover, right? Or are they just doing some moving around, lowering debt, rearranging the company, things of that nature, and they're going to fly, very similar to 2022 dip. Okay, a lot of rearranging in tech. All right, our AI boom is still booming, so that is holding the backs of the market right now, but it's very difficult to uphold that for a long, long period of time, and we need to have balance in the markets. All right, so it seems like I come on here each time there's like scarcity coming, and there's no fear mongering here. It's just the market goes up over a period of time. And I think right now is very pivotal. And I tell my clients this, in my community this, that for a lot of folks, right, with inflation that has been increasing over the last, 5 years or so, a lot of folks just can't afford another big turnaround. They can't afford another hard recession, a hard landing. They can't afford that because there's not enough cash or income that's increased to buy the dip or to buy assets when they come back down. And to increase their income, right, the job market or the labor market is struggling a little bit in specific sectors, right? Cost of going back to get other skill sets and going back to school, things of that nature, right? And I'm an optimist, right? I'm always a solution oriented individual, but for a lot of folks, they can't handle that, right? They can't handle figuring something out if they're not aware, right? So I like to bring awareness, and then you make decisions off of that, just so you know that, okay, maybe I can protect myself or looking to protect myself going in the future. All right. So let's jump into the charts. Okay. Jump into the charts, and really quick to finish this piece off. If we're in extreme greed, okay, and you're looking to buy stocks, right, that is not necessarily the time to buy stocks at when we're extreme greed. Okay, just rule of thumb, right? Obviously, buy when you want, dollar cost average all the time, but buying heavy when we're extreme greed, that is when big hedge funds, investors are redistributing or rebalancing their portfolios and moving sectors, and we may start selling off back down pretty quickly. Okay. All right, let's jump into the charts here. All right, I've already got SPY up, so SPY is the ticker. All right, and I've got it on a weekly time frame, and I wanted to show you here. Let's take off the moving average and simplify it. That we've got. Let's take off the drawings. We've got a uptrend, right? Clear uptrend here that you can see. There's a cup and a handle formation, right? Cup, handle formation, and then a breakout right here. Go look up that formation. All right. And we're breaking into all-time highs here back in October of 2023. So roughly around the same time, right? If you think about it, roughly around the same time we corrected, and then we broke out into all-time highs, and now we've pushed up. So I'm not opposed to the same thing happening, right? So if we do the same thing, this could be the same like mini structure here, right? We've got a cupping formation, a handle, and then a breakout. All right. So I am looking out for that. All right. So let's turn back on our drawings here. And I wanted to show you, and I'll zoom in to lower time frames so you can understand what these are. But really quickly, analysis, bullish, right? We did break trend here a little bit, but we got bought back up pretty quickly once we reclaimed that 524, 525 level. Okay. So once we got back above that 524, 525, we reclaimed 530. We were back off to the races, back to highs. We popped back down, and now we formed either right here, we formed another higher low. Okay. So the trend, as you can see, for my analytical people, you're visual, or if you're visually impaired, I do understand if you're watching this, but if you have got your eyes open, you can see that we are going up. All right. So that is what it means. Don't fight the trend. Okay. So let me get rid of that and zoom in just a little bit here to the daily. A couple indications here that we could break out. All right. So you just saw the data that came in, or this coming in this week. So on Wednesday, I could see, or excuse me, on Monday and Tuesday, if retail sales or we do have the business inventories, that home price index there. Excuse me if I'm miscalculating. Let me not do that here. Right here, we've got the home builder confidence. Okay. If any of those data reports kind of cool off, then yes, I could see us pulling back just a little bit into this range here. Let me go into a 4-hour to clean it up. I could see us coming back to cool off into this range here. Okay. So if we cool off like that and a candle comes back on Monday and Tuesday, just taking off some risk, right? But there's still buyers sitting at this 555 to 557. That's why I have these yellow lines here. It's just a caution zone. I want to pay attention to how we react in this zone. So we come down into here potentially leading up to Wednesday, where FOMC is going to be presented with Fed Powell making that interest rate decision. And if we come back in there, we just kind of consolidate and sit and sit and sit, and we don't have much movement, right? The data comes in, and just say we do this, right? We just absolutely break out once he releases that afternoon, right? Do you see how the cup and handle can form? Maybe even, for some of you, maybe some inverse head and shoulders. It's a little, ugly here, but, more of a cupping formation, handle, and then break out into all-time highs. Okay. So that is my first like thought process is don't fight the trend. If we go up, great. Now, when we go up, right, there is a ceiling, right, that is up there, right? Because we could do one of two things. We can go up, right, and we hold up here. Okay. Remember, whenever you have a breakout like that, you want to hold your horses. You want to hold yourself, be patient for how we react once the breakout happens. So if we do some type of breakout, and it wouldn't be that far immediately, I don't suspect, it would probably be something like this. We start pushing and pushing and pushing, and it finally squeezes above that 565. All right. I want to see how we react around that 565 if we hold. So there will be a small red candle just in case people held calls here, just, for a pop, right? Or held their shares and then popped up. I want to see us hold. Okay. They would look like that red candle right there. Okay. We would hold, and then we can go higher. Okay. So that is simply how a breakout would look, and the ideal entry would be making sure that 564, 565 area holds. Okay. Now, another scenario is that it could do as the okie doke, meaning we break out and then immediately sell. Okay. Immediately sell, and then it continues. And if we get back underneath that 555, you can see there that now it breaks underneath that trend, and it has now broken down, and we are continuing probably to the lower end of the range. And then going into October, so on and so forth, it could get pretty ugly, but we still got buyers sitting at these levels. Okay. So those are my two scenarios if we break into all-time highs. Now, let me show you this. Let me erase these. Okay. So you see, I have both scenarios ready to go. Okay. 555, as long as we're above there, right, we're still bullish to push into all-time highs. 555, 557, either of those ranges right there. If we start breaking below 555, then I want to see it hold below, and it would look something like this. Okay. So here's the kind of the bearish case. Okay. It would push down underneath it, push back up slightly. Okay. Make sure it doesn't reclaim. And then I'd be looking for that continuation back down. Okay. So that is what a bearish case would look like. It needs to break strongly underneath, wait for that green candle recovery, because we could just recover right back up, right? So just be careful that, there is sufficient weakness right there, and then you'd find your entry back below 555. All right. So let's get rid of these. Now, let me show for my Fibonacci people out there. Okay. We can do a Fibonacci extension. Okay. Go look it up. This is not, a full educational piece on that. This is just analysis, right? I want to draw it from these lows here. I want to bring it up to the high and draw it to the pullback right around 555 or so, right there. So you see, it gives us some ranges or levels above, right? Now, personally, I don't believe, do you see where I drew this right here? I've got, if we do push up, right, I've kind of got this 570 to 573-ish range that I want to kind of watch out for. So I have a resistance up here. If we do pop up into that range, right, that would be the area that I'll be looking for it to squeeze up into, and then kind of get a little bit exhausted potentially. So that's where I kind of got that red line that you saw before, just kind of sitting up in a no man's land up here, is from that Fibonacci extension. So 570 to 573, I'd be looking for that to be that cool off period to pull back to that 565. So break of all time highs, you can maybe find an entry to take it up for calls. All right. But I personally want to see the breakout, see how we react, and then hold, and then take it up for calls. Don't fight the trend. And if we push too quickly up into these highs, I want to kind of watch for maybe a sell signal and then take that right back down. All right. So there is SPY. Okay. Now, QQQ is very interesting here, because if I take off these after hours on QQQ, okay, and as a reminder, really quick interlude, this is Webull, right, that I personally love. I've got my options set up here. And then this is just kind of my research. And then you can see the tabs up here where I can have everything. So this is just my research tab. You see here that QQQ is on this trend line here, right on top of it. So your level for my QQQ people is 478. We break above 478, which is this red line right here, this area, right? Then we're going to be pushing up into probably the gap fill and squeezing. Okay. It would look like that. Okay. So 478, you can take it up to around 486 plus. Okay. And probably squeeze up into that gap fill. Now, again, if QQQ gets up here, right, then I'd still be personally looking for a retest of this high and then watching this area, how it reacts, because QQQ is lagging just slightly behind SPY as far as being back at all-time highs. So it does have more room to run. So I want to watch that to just, if it gets strong, don't fight that trend and let it, break out into all-time highs, and then find your entry for calls going up. All right. IWM are the small cap companies. Now, if we do get rate cuts, right, we could see a rotation into small caps. All right. So rate cuts for small caps are really good depending on how the charts react. Okay. So you see here that when there was anticipation for rate cuts coming, right, IWM really didn't have much selling coming in. It just kept squeezing. We have a hammer candle right there. It just kept squeezing back to potentially all-time highs. Again, back to this 225. All right. So I am watching IWM, how it reacts as well, because if SPY and QQQ sell for whatever reason, then that money would be rotated into IWM and IWM could be breaking out. Okay. So I do want to watch that as well on the small cap companies. Okay. Let's jump into some of the main tickers here that affect the market and some things that I like. Let's jump straight into NVIDIA. Okay. Just because I know a lot of folks are always concerned what NVIDIA is doing. They had a nice inverse head and shoulders that we called out in our community right here, which would look something like this. Okay. And that was actually leading into Jung. Okay. That was actually leading into the CEO's message at the tech conference that he was at. I think it was last Wednesday. So that was a nice trade right there. That nice breakout of 110, reclaimed 112 as well, and then started squeezing up in this 121 area. So you can see that I already have a consolidation, right? Anytime there's a breakout, there's typically a consolidation. It just kind of sits and then waits and see which direction the market may want to go, and it follows suit. So that's why we didn't have much movement on NVIDIA on kind of Thursday and Friday. All right. So everyone's waiting on this week to see how we react and how we finish off the month. So one scenario for NVIDIA, if the market pushes SPY and QQQ, NVIDIA does have a gap back up to 125. Okay. So I can see NVIDIA breaking out of here back to 125. And then we see how we react at 125. So you want to watch for a break confidently over 121 and some change. Okay. So 121 and some change, you'll probably get that nice squeeze into 125. So about a 4 or 5 point move from NVIDIA. Okay. Now, if we break over 125, then personally, we know where we're going, back to 130, 130. Okay. So don't want to play necessarily against NVIDIA, but there is a cool off after this big breakout that we could see from NVIDIA if we have some double top action here. So if I get rid of this, just say NVIDIA tries to break back up, right? Breaks back up here and still gets stuck. Okay. Still gets stuck here for whatever reason, which would be interesting because volume would pick up out of this. And typically when volume picks up out of this channel, it typically breaks out to the next level like that. Okay. So, but for whatever reason, if they get stuck right here and it does the okey doke, I could see us pulling back to 115, 116 is a support. Okay. So you're not going to see much continuation on the downside until we really break underneath 116. Okay. So for those people that want that NVIDIA pullback to 110, I do understand, right? That'll be an awesome pullback to that 110 area, right? And a little bit of recovery off that 110 potentially. Okay. So watch for that. There are a lot of interested individuals I've seen just from research that are looking for that kind of 110 area to retest. Okay. For those that are fairly new and don't understand that, when you have a big straight up move like this and it consolidates, there is also potential for a straight down move because that is not a necessarily, that was a reactionary move from the CEO speaking, right? So this straight up move is not a natural progression of the stock. So there was a big reaction from its earnings. Cool, nice recovery. Jung comes back and says, this wasn't indicative of who we are. Let's recover, consolidate, and then keep going the trend that we were going. Okay. So watch that. NVIDIA's been moving very, very nicely lately. I've been liking trading it. The contract prices are really good after the split. It's kind of settled into its nature. So I personally like trading the levels because you can get pretty good NVIDIA contracts closer to in the money, and they're moving very nicely. So kind of moved over from Tesla to NVIDIA personally. Tesla just, geez. Anyways, let's go over to a couple others that I like that are very strong right now. Okay. Amazon, right, will react to retail sales typically. Okay. So that data on Tuesday morning, Amazon could react to that. So Amazon could be nice to trade. It is getting close to this 190 area that it may want to retest, but there is a level at around 187 for Amazon. Okay, 187, 188 for Amazon. So I do want to watch that. It has been rejecting at 187 back down to about 181, which it kind of does need to retest, right? It broke out of here. And what did I say earlier? That it typically, when we have a straight up move, we have a retest of that breakout level. Okay. So it would look something like that for Amazon. And then if it holds that 180 level, then we could break back up and go back up to all time highs. Excuse me, not all time highs, but break up back to 190 if we can't get above it the first time. So that would still hold true to this trend line here on Amazon, right? That it has just holding this trend pretty nicely. Okay. So if we break anywhere in this, 179 to 180 zone, I want to watch how we react there and we could take it back up. Okay. So you want to be sure that those levels hold because remember what I said about SPY, right? If you start chasing the downside, like, okay, here's my pullback, and you start jumping to calls immediately. I think my experience investors and traders can always, back me up on this maybe is that we've seen trying to chase a call downside like this. Okay. So it pulls back into our zone, right? And then we don't get much reaction. There's really no buyers that want to step in here. And then it continues. Okay. So I personally, that's why I lean more towards the put side. I really like rejections. If for me, but the call side, I've got to be more because when selling gets aggressive, right? Even in the bull market, and when you're trading more specifically, and you're like, oh, it's in my level. Let me just jump into calls and get ready, and then it continues, right? So I like to be very cautious when I see big red candles pulling back like that. I want to react accordingly in the zone. So I should see a nice pullback wick off of there. It would look something like this. Okay. No, it's not centered, but get my drift. It would look something like that. All right. Very similar to this. There'd be a big wick off of there, and that tells me that buyers, okay, are stepping in at 555 and I can take it back up. All right. So, all right, let's wrap this thing up. We went over NVIDIA, Amazon, Google. All right. Google's very interesting here because do you see this kind of hammer candle? If I zoom out, it kind of forms a really nice hammer. I did personally in my community, okay, me personally, I did based off of where SPY and QQQ were, I did try to take a nice, easy reject off of Google and it just didn't work out, right? It worked out for a little bit, but it didn't continue, right? So I was rejecting Google right around here once I saw that signal and it started to continue and then it just got stuck right here at this 153-ish area. So I was looking for Google to do this, give me a nice pullback into there, and it just didn't continue. Okay. So nice trade. It just didn't continue and had to kind of, take a little loss on the runners that I had left in the trade. Okay. So what I'm bullish on Google for the long term, obviously, but depending on how our market reacts, this is what I'll be looking for on Google. If we pull back heavy in the market, right, I want to get another re-entry on Google around this 150 area, okay, to push back up Okay. So that is kind of the idea I was looking for. Is I missed this kind of call entry and I was looking for a reject, come back down, and just didn't do it. All right. So do you see all this upside? Google looks really good in my opinion on a bigger time frame, like a weekly. See how Google kind of had this cup and handle formation, broke out and then pulled back. And now it held up that 150 level. Okay. Now, another thing that I am looking out for is that Google in the short term is still forming these lower highs. Okay. So it is not broken back out of this trend back over really 170. Okay. So Google needs to kind of do this to really pick up some steam to go back to all time highs, which is why I was comfortable with maybe potentially rejecting Google. Right. But it was just a little scalp. All right. So that's what I would want to see on Google to really test the all time highs, but never hurts to buy the dip, especially in shares, dollar cost averaging on Google. But yeah, you see all these gap fills that could get filled up here. So Google got that 170 level marked off right there to really change the trend on it. But if for whatever reason we don't change trend and we start getting weak in the market, because the market again is at all-time highs and Google is still sitting down here trending downward as the market was going back up. All right. So if we do get this and we break trend, which is possible, then we wait for this lower level of 130 that I've got marked off. All right. So something like that. Okay. Which, as you can see, is very possible. Right. Here was Google trying to retest. Nope. Okay. Retest and then potentially nope. All right. So I do like the way Google is moving lately and has been trading lately, to be honest with you. So pay attention to Google. Let's look at Tesla, folks. Okay. So Tesla, again, it's got this big gap fill. The only levels you need to be worried about on Tesla are breakout over 236. Breakout over 236, you can squeeze right into, in my opinion, 250. Okay. Over 236, squeezing into 250. Okay. But if it keeps rejecting 235 for whatever reason, big reject, big reject. Okay. And for whatever reason, the market gets weak and we can't get above there, then we're definitely coming back probably to 200, 205. Okay. And it breaks trend like that. So again, Tesla's made a big move off of these lows and riding this wave up. Okay. So you want to be careful trying to chase calls up into this resistance area. You want to make sure that it breaks out above 236 strongly, and then you can take it up. Okay. So watch out for that. Don't get okey doked on Tesla. Personally, if you like to trade it, I've been kind of staying away from it a little bit. If I see it, it needs to be on a Wednesday or a Thursday, and I'll trade it weekly just in case something crazy happens, kind of like right here and right here. Which both of those, the day I trade Tesla, it doesn't do one of these. All right. And so go figure. All right. So there's Tesla. And that's really all I got to say, right? If you want to learn more, all right, this is a free video here on YouTube. I wanted to give you scenarios on SPY, QQQ, IWM, and some key tickers you may be trading or watching yourselves. But if you want to learn more and you want to get exclusive trade ideas, entries, things of that sort, please join our Discord down below. It's $97 a month. There is a 7-day free trial that you can come in, see me live trade, and also join the community, see how active we are. There's also a one-on-one that you can join as well, as far as a mentorship specifically for trading, where you're working one-on-one with myself, and I get you set up with your charts just like you have here that you're seeing. Understand price action, how the candles move, how to read them properly, and then how to properly enter the right options contracts on the options chain so you can make minimum 50 to $100 a day. And then if you're more savvy and you grow, obviously 500,000 plus dollars per day. All right. So looking forward to seeing you, men and women. Thank you so much for watching this and giving up of your precious time. I look forward to seeing you inside of Discord and next time on YouTube in another video. Please make sure to like, comment, subscribe, and I'll see you guys in the next one. Peace, love, and blessings. Bye-bye.